Hey, hello everyone, welcome back. So today in Saturday's video, I'll discuss some basic concepts for the new investors or for the beginners. I'll discuss the concepts like dividend and capital appreciation. So capital appreciation means when we buy any stock, any share, suppose you are buying a share in 100 rupees and you are selling in 120 rupees. So that 20 rupees you get as in capital gain. That means the price of the stock increases or appreciates and you are getting that gain 20 rupees, or you can say 20% you got the gain. So this is your capital appreciation. That means the money you invest over the year, it increases, or over the month it increases. Then it's a gain, capital gain. Now, what is dividend? Dividend is the money that you get when you keep the money in that stock for a longer period of time. Then sometimes the board decides, or the company have good amount of profit, so the company they decide to pay out some money to its shareholders. Let's say company X wants to pay some dividend to its shareholders. It has some good amount of profit. It has let's say 1,000 shareholders, and per share the company wants to pay, let's say, 10 rupees. So each person, or for each share, the person will get 10 rupees. Suppose you are holding 20 share, so 20 into 10, that means 200 rupees as a dividend you will get in your demat account, the account that you have linked with your demat account, right? Automatically you will get the money. So that is dividend. But it's capital appreciation. Capital appreciation means you are buying the stock in 100 rupees. Okay, you are not getting any dividend, and after 1 week, 2 weeks, or 1 month, you are selling in 120 rupees. That means you are getting that profit, that is 20 rupees. That is your capital gain. And of course, in dividend also and in capital gain also, you have to pay the brokerage and the taxes also. So deducting all this, the gain that you are getting, that is called, let's say, your capital gain. Now we will see that which is better or both better. So what I follow is that I need both. I generally look for my long-term investments plans. I look that companies should also appreciate my money. There should be capital appreciation, and the company also should pay some amount of dividend, because without dividend I don't feel like holding the for longer time. Okay, suppose I'm holding Titan company. Titan is a very good company. Many big investors are holding also this company, and the company has compounded your money annually, means has the return is quite high, right? So you are holding it, so it is giving you a good capital. Your capital is good, appreciating nicely, and you are getting a good capital gain. But the company is paying, supposed to pay 4 rupees dividend per share. So it's not a good amount. If you say 1,500, the company is the current market price is 1,500 rupees approximately, and if it is giving 4 rupees per share, then it is not a good amount of dividend. But it's okay, because I'm getting the capital appreciation. My money is I'm getting a good capital gain. My money is continuously increasing. So if I'm not getting a good dividend also, it's okay, right? So always getting a good dividend shouldn't be a criteria of investing in a company. Also, if the company is not forward looking, or is the profit the company is getting is not investing in its new expansions, or acquiring some company, or developments of its business, it is distributing all the money or paying all the money to the shareholders as a dividend, then also we cannot say the company is good. That mainly happens in mainly happens in case of a PSU companies like Coal India, Indian Oil. They pays most of the amount to as a dividend, because they do not have plan to expand their company much. because their promoter is government of India generally. Okay, so government do not want to expand the company more, right? So, but also we need to check some companies that we should pay us regular dividend, or some dividend that should be greater than your at least bank interest, and also the value, or there is some capital appreciation. So this company you can believe on, or you can invest in, right? And some of part of your portfolio also should be there, like there should be good capital appreciation, like Titan or Asian Paint. So Hindustan Unilever. Okay, though these companies are not paying, or you can say the dividend yield is not very good, but they are giving you very good capital appreciation, and the company is quite strong and developing. Okay, so also we should focus upon this type of companies. And these are the strategy for long-term investment. Short-term investment, we have certain plans that I discuss daily. We should focus on the news and on the upcoming bonus, dividend, so that there is some buy and sell, or there is the previous means old investor that do not want to sell in those time. So there is a demand in the share, and price gets increases. So you get a quick capital gain of your portfolio. That's why if you are you should have you should divide your portfolio into two parts. One part should be focused on capital, your long-term investment plans, and one part should be your short-term investment if you are interested, or if some people, if you do not have at all time for the news, for updating yourself, then do not invest in short-term depend upon short-term investment. It is risky and you may lose the money in that. Okay, and some of you are asking that my money after that ex dividend, that the price is current market price is down, so what should I do? Never sell, because you have bought for the dividend, right? So next year you will get the dividend, hold it. In between, if you see that the price is increasing at 30%, 20% profit you are getting, and you sell it. Now you shouldn't hold the company if it is after a particular amount also. Suppose if you are holding the company beyond 30% or 40% increment, and also you are thinking that it will go beyond, then you are getting, it's like a strategy of long-term investment. So short-term investment, if you are planning for get 20-30% investment, sell it. That's it, right? Find out some new company which are in news, invest in that, get a quick capital gain and sell it. That's all about short-term investment. Long-term investment, find out the company, good potential, debt, management, everything you check, and make a good fundamental analysis of that company, invest in that company, forget about 10-15 years. Okay, just look, go through some news and what are the things happening, like Yes Bank 250 to 10 rupees, right? So also it happens sometimes. So you should also always not believe in large cap companies. You should sometimes also have to analyze it. Now, how using a screener.com that I have shown you in the last video also, using a screener app website, you can get the idea that which company are also paying good amount of dividend. Along with that, it is also the capital also, you are getting a good capital gain also, right? Capital is also appreciating. So let us check how you can get this type of information. Let me share the screen with you and I'll show you how to do that. Okay, so now we are in screener.in website. So I'll add a screen to analyze different companies. So how I'll do that? In the last video, last to last video, I have shown you that who are the debt-free company, how you will get from this screen or in. Now I'll show you what are the company which pays good amount of dividend. Let's say more than bank interest. Now the bank interest is around fixed deposit or RD around 5.5%. Now let's say which companies are paying or having dividend yield more than your 5%, let's say. So dividend yield will do. So how do you write? How will you search? Greater than 5%. Okay. Dividend yield greater than 5. So value in 5% here written. So only if you write 5, that means it is 5%. Now if you run the query, then what you will get? Now you see these are the company it is showing which are giving you a dividend yield 5%, 6%, 7%. This is your dividend yield column. So this is showing you that these are the companies like Hindustan Zinc, Polyplex, ITC, Coal India, Balmerlo, and TV Today, HPCL, Indus Tower, SJVN. So these are the companies which are giving you more than 5% return. Also, some of the company debt is given here. What are the debt of this company? Debt of the company, you see Balmerlo is have no debt. It's a debt-free company. Then you see Risirup is also debt-free and very low debt. This one is Banco Products is also very low debt. Goodyear India is having also very low debt. Then TV Today Network also having very low debt. So you can see these are the companies which are providing very good amount of dividend and debt is also very less. Then Clariant Chemical. So these are the list. Now I need further filter. So what I will do? I need some company which have market capitalization greater than 5,000 crore at least, right? So that means mid-cap, right? Mid-cap companies, mid-cap or large cap. I want those companies. I don't want small cap. So what I'll do? I will write and. Okay. So when I'll write and, the cursor will come down. So I'll write here dividend is greater than and market capitalization greater than 5,000 crore. 5,000 I'm writing, and it is written that the value it is taking as crore. So 5,000 crore. Now I'll search. Let's see what I am getting. So I am getting only 10 companies in the list. REC, Power Finance, CESC, IOCL, SJVN, Indus Tower, HPCL, Hindustan Zinc, ITC, and Coal India. So these are the company which are giving you a return greater than 5% or sorry return. These are the company which are giving you a dividend yield greater than 5%. That means more than 5% return you are dividend you are getting per year, right? And debt is also there. So debt of Power Finance is quite huge, and debt of REC is also huge. Debt of IOCL is also more, HPCL also more, Indus Tower also debt. Other than that, debt is less in ITC, Coal India also average. Okay, so debt also you can get. Now, the important thing is 5 years return. This column is I'm interested about. That is a 5-year return. Over the 5 years, what the company have given me. So suppose I have purchased Coal India 5 years back. Now my value of I have purchased Coal India around 1 lakh rupees, let's say. Now it will be 15% less. Though I am getting 8% dividend yield per year, but the return on my capital gain is minus 50%. That means my money will be become 85,000 if I have purchased invested 1 lakh rupees 5 years back. So what does that mean? That means that I'm not getting any capital gain. So it is not good, right? So which company I should focus on? So I shouldn't focus on Coal India Life. company, though it is a large cap company, and though it is providing a very good dividend yield like 8.67%, but it is not giving me any capital appreciation. So this type of company I should not have or keep for long-term investment. If I am getting a news that company is paying dividend, I should buy it, I should get some capital appreciation, or I should have the dividend after a few months or after 1 or 2 months, few days. I need to sell this company because the history is saying that in 5 years the company is not provided me good amount of return. Similarly for ITC, last 5 years it is return is minus 3.34%. But Hindustan Zinc has given approximately 5 years return is 10%. Now see, it is giving a dividend 6%. Along with that, the capital also appreciated with a 10%. So I should focus this type of company which is paying me some of an amount of dividend around the interest of bank interest at least. If I would have kept my money in bank or in RD or fixed deposit, I would have get 5.5% approximately. So I'm getting that amount of money. Along with that, in bank, my capital is not appreciating because I have kept 1 lakh rupees. It is giving me 5.5% or 5.5% return every year, right? So it is not, my capital is fixed 1 lakh rupees, but here my capital is increasing 10%. Along with that, I am getting a dividend yield. So I am happy with that. Because both are increasing. So if I am getting some companies which both means your capital is appreciating, along with that you are getting some amount of dividend, it's a bonus for you, right? So this type of company we can rely on, so that in our account we will also keep on getting some amount of money on as a dividend. But some of the company also in our portfolio, there must be good companies like growth oriented company which have good future. Like as you can see, some of the people are saying Easy Trip Planner have good future. Zomato may become Zomato, or recent IPO that is coming Paytm. Okay, so they can be also next market leader, and they can appreciate your money in a very good way. Your money will be appreciated. You can get a good capital gain, right? So that's all for today. So new investors and beginners, you need to focus on the things. Not only just you shouldn't somewhere you get the news that the company is paying dividend, but you should look before you invest money. You should look detail about the company, so it will be helpful for you. Okay, only one news, one parameter will not be sufficient for you, and you will not get a good return on your portfolio. Thank you for watching today. See you tomorrow on Sunday with another video, and Monday we'll see with share market topics with company who are on news or who are going to pay dividend. We'll discuss on Monday. See you tomorrow. Bye. Take care.